Welcome back to GoldSeek TV. I'm Peter Spina, the president of GoldSeek.com, and it's my pleasure to have the CEO and president of Fortitude Gold, Jason Reid. Thank you for joining us today.
Peter, thanks for having me.
It's wonderful to have you on our show today. I've been following you for about 15 years in the gold industry with your background, not in just Fortitude Gold, but in Gold Resource Corporations. So if we can maybe start off today's interview and give a bit of a background of how Fortitude Gold came about, your background with Gold Resource Corporation, and how the company kind of came to be, and a little bit of that background, that would be fantastic.
Sure. Yeah, with Gold Resource, I was with them for 15 years. I was CEO for about 10 years. We focused primarily in Mexico, and we had an underground mine there and a small open pit there, and actually a couple of underground mines for that matter. But that company, Gold Resource, was created from its origins to pay a dividend. So we went into that making sure we had a tight capital structure, a very profitable mine from which to have great margin. And then we leveraged that margin against a tight capital structure to pay a substantial dividend. So we took Gold Resource public at $1 per share and hit a high of $31. Now we're in a business that's cyclical. So you have bull and bear markets, and we were tore down just like everybody else in this space during the bear markets. But even through all that, we remain profitable. So from the point in time we got into production, we lived through a brutal bear market, but we remained profitable. But we were profitable for a decade. And over that time frame, we generated over $1 billion in revenue. And equally important is we returned $116 million back to the shareholders in dividends. Wow. And the height of the dividend, I believe, was 72 cents a year. And we paid monthly back then. So that was the reason why we went to $30. So if we fast forward a little bit from there and ask the question, well, why Fortitude now? We had created a small mining unit, if you will, in Nevada under Gold Resource umbrella. And it made a bunch of sense to spin that off into its own company for shareholders. So if you're a shareholder in Gold Resource, you got your prorated share in Fortitude Gold. But by doing that, we were able to hopefully provide more of the beta, more of the dividend thrust, more of the potentially higher mover in Fortitude Gold. And we were able to then deploy more capital back into the ground in Mexico for Gold Resource. And it would serve both mining units, if you will, more optimally, and equally important, deliver shareholders both a growth and a dividend component. So we spun off Fortitude Gold. And at the time, I actually thought I was going to be CEO of both. But as we got to the kind of goalpost, the finish line, if you will, of the spinoff, it was brought to my attention that while one can be CEO of as many companies as they want, if you're doing a tax-free spinoff, at some point the IRS will come looking, and if you have to be 100% independent, and if they look at you and say, well, you're running them both, it's not going to be independent, therefore it would blow up the tax-free nature of the spinoff. So while I went into it thinking I was going to run them both, it necessitated that I go with Fortitude Gold because all the input we had from whether it's investment bankers or advisors, et cetera, they said the only way Fortitude Gold works is if A, you have a management that will actually deliver on paying a dividend, that actually does that, and somebody who the market will believe will do that. So with the track record of having a decade of consistent monthly dividends, it just necessitated me going with Fortitude Gold. So I did that, and Fortitude got spun off 100% separate into its own company and focus only on Nevada. So that's kind of the history of Gold Resource, the origin of Fortitude Gold. Now we're 100% separate company, and we're taking everything we learned with Gold Resource, having a tight capital structure, a great margin mine, et cetera, and applying that again with Fortitude Gold. And so we came out, I believe we started trading at $1 and we've hit a high of $8.40 or more or less. It's pulled back since, but we're still close to $7. So we're well on our way. And that's kind of the history of and origins of Fortitude Gold.
Right, and it's a very unique story. It's very different in the sector in many ways because you are paying a high margin, a dividend margin. It's the dividend yield is something around 7 to 8% now. Monthly dividends. You have an excellent share structure, which is almost unheard of for a junior producer, gold producer. You also have a very high margin mine, so you're producing at high margins, low share structure. No debt. You really stick out in many ways that way. So how did this strategy? How were you able to execute to put a mine into production? And you did in a very short period of time too. And your all-in sustaining costs are several $100s an ounce. So tell us a little bit more. How did this come about, and how are you able to execute on a strategy which really is able to protect the shareholder and deliver value to them?
Sure. Well, it all starts with the assets. So if you're watching this interview and you're unfamiliar with grade, it's not uncommon for mining companies to chase 0.5 gram in an open pit. So when we were looking for this mining unit, to create this mining unit, our objective was open pits north of a gram in a mining friendly jurisdiction. So we were all up and down the Americas for 4.5 years during the last bear market. And we looked at a lot of different opportunities, grade being one of them, metallurgy being another, the ability to extract the ore, mining friendly jurisdiction, access to infrastructure. We had to check the boxes we wanted to see, and it took over 4 years to do it. But when we saw the opportunity in this particular area called the Walker Lane Mineral Belt in Nevada, it checked all the boxes. So we closed 4 deals in 14 months to get our core holding, our land portfolio started in Nevada. And that drove everything. And it's a function of, as I mentioned, many mining companies chase 0.5 grams. They produce from 0.5 grams in an open pit and try to make up for it by moving a lot of tonnage. We're able to move far less tonnage because our deposit at Isabella Pearl, for instance, is north of 2 grams. So if you're asking, how is this possible? It's a function of the assets. Mm-hmm. So we couldn't do this if we were chasing a 0.5 gram. But again, we were kind of counter-cyclical by looking for properties back in the bear market when everybody was selling or nobody was looking. And if you fast forward to today, I have Anglo Ashani and the majors in my backyard picking up properties and staking claims that I turned down. So I believe we have the best property portfolio in this part of Nevada, and that drives everything. So then we move forward and get it into production. It's such a high margin operation because of its grade. All of our properties have surface or near surface gold, and all of them north of a gram indication. And so we're in position to keep repeating what we've done at Isabella Pearl, as long as we deploy enough capital to explore, discover, delineate new deposits, to keep doing this and keep us here. But we put this into production. We got it in from groundbreaking to first production at Isabella Pearl, which is our producing asset. Took 10 months. It should have been 6 months. I fought the whole time with an awful contractor. And even with that, we told the market, a year or less, and we hit that. We came in at 10 months. But again, it should have been 6. We're now positioned to try to do this again because we're going to try to leverage the infrastructure at Isabella Pearl so that when we build other mines, we're going to, for instance, at Golden Mile, pull carbon, take the gold to the carbon phase and pull the carbon over to Isabella Pearl. So we don't have to build as big a facility. Or at County Line, which is up the road, a very short distance, just haul the ore down. So we hope to continue to do this and put mines into production at a very rapid pace for the industry, low CapExes, and just repeat what we've already done. In my mind, Peter, we've already done the heavy lifting on the first one. Mm-hmm. And now these next ones we build, we don't have to spend this same capital. For instance, we're not going to build an ADR at each. We're not going to actually build a process at County Line, just haul the ore. So that's kind of the approach we have, this hub and spoke approach. And now that we've done the first one, we're in position to do it again.
That's excellent. It's a really limits your capital expenditures. You're able to get these things into productions, these deposits faster. So with like County Line, you just haul the ore over to the leach pads there, and you're able to at Isabella Pearl and just kind of leverage what you have there. Sounds like it's very easy. So
Go ahead.
So let's just kind of go. Let's look at the asset a little bit more. This mine. So I think the production time frame was about 2018. You started to develop it. So the first gold pour was that 2019 or so. It was.
Yes.
So you've been producing. You're targeting around 40,000 ounces of gold ounces a year, which again, as we talked about briefly here, is that your margins are a lot higher. So not all ounces are created equally, and here you have some very high grade near surface, at surface gold. So you're producing some huge margins on these gold ounces. You are cashing up the balance sheet, and as we said, there you have no debt. So you're sitting on a very nice cash position. Isabella Pearl, you've been mining through this deposit. So what is the length left at this current deposit, and then I guess what's the transition into the County Line project, the Golden Mile, and the next, I guess, production steps that you have lined up?
Sure. According to the mine plan, we'll mine out Isabella Pearl this year. Having said that, we drilled, we had a small window to bring drills into the bottom of the pit, and we drilled several months ago and have delineated additional ore blocks that are in oxide ore or transitional ore, meaning you can recover it through heap leach. Mm-hmm. So we know there's additional blocks deeper. We didn't have the time to sit and delineate them all and do an extensive drill program. But my point being is we may be there a bit longer than originally planned because there's additional ore deeper. Now this ore turns into a sulfide, which we can't extract with the heap leach. And there's a lot of ounces there, but our focus is on we don't have the facilities to process that sulfide ore. Our focus is on the oxide ore. And so all our properties, we're looking for oxide ore to do open pit heap leaches. So we'll finish out mining this year. Having said that, we should have enough ore on the pad for an additional year of production. So about 2 years out. And then we expect County Line to come online. We were originally pushing Golden Mile, and we still have our foot hard on the gas pushing that forward. But when we did an initial drill program at County Line, we quickly found an initial resource of 40,000 ounces, and it's open on strike and depth. So we need to keep, and we have drills. I was just out there. There's 2 drills out there now. We need to keep finding the limitations of this so that we can see how long we'll be out there. But the goal would be out there as long as possible. But with that recent drill program and not building a process there, if we're hauling the ore down the road a short distance, we don't have to permit a whole process. We don't have to permit a heap pad. We don't have to permit an ADR facility. Mm-hmm. So the permitting could be dramatically shorter. So it got on train tracks parallel to the Golden Mile, and we were moving them full speed down the tracks. But the permit timing we expect to be much, much shorter with County Line. So that one is the likely next producer. And, we don't know yet exactly how long we'll be there because the mineralization that we've drilled is still open. So we'll keep drilling that, get our hands around how long we'll be there. Hopefully it's, longer rather than shorter, but, at least I hope a year. And then we'll transition over to Golden Mile. Again, at Golden Mile, we don't know the limitations yet there. That mineralization is open as well. But the ability to move forward without having to drill the deposit completely is somewhat unique in the industry. This industry is long lead time, and it's common for 10, 15 years before a discovery is made to something going into production, if it ever does. And in large part, just because it takes so long to delineate the whole thing or enough to justify a production decision. Well, under our hub and spoke approach, all we need is enough to justify mining and trucking in County Line, for instance, and then haul it down the road. So that hurdle to make the decision to move it forward is very low. Mm-hmm. So, Isabella Pearl, the next couple of years, then County Line, we'll see how long we're going to be there. We're unsure at this point, but I would hope at least a year. And then golden mile, hopefully numerous years. And all the while, I hope we're spending 10 to 12 million a year like we did last year on exploration, so that we not only expand the known mineralization, but we'll discover new areas of mineralization, new deposits. It's our goal to be a long-term producer in Nevada. And it's never our goal to grow for growth's sake. I'm not trying to impress the market or anybody with 40,000 ounces. I want to be one of the more profitable mining companies. I don't ever want to be the large, hey, I produce millions of ounces, but I barely made any money, which a lot of mining companies do that. Yeah. We're all about making money and returning it to shareholders in dividends.
And that's an important aspect, is that you understand what the shareholders want. And that's in part because management owns shares in the company. You are shareholder managers. Is that correct? You have a large position.
Yes. So, yeah, we're large. Our interests are very much in line with the shareholders. Mm-hmm. And yeah, it's just a different approach as opposed to caretaker management, who, all they're really focused on is their wage or their salary. We're focused on being here a long time, returning, like we did with Gold Resource. We returned $116 million as a junior producer with Gold Resource. It'd be great to do that again with Fortitude. So it's just a different approach, but it's also one that allows us to outperform our peers because we have two valuation metrics. If you're a gold equity and all you do is produce gold, you're valued on that. Great. That's a good thing. But when the bull market hits, rising tide, right, raises all boats, lowers all boats. If you have that additional metric of dividends and yield, you will also be under the rising tide or elevating tide, but to a lesser extent, because your shareholder base, in our case, often doesn't care what we do. They just want their dividends. So the gold price could drop a bit, which would push and put pressure on most gold equities, whereas us, it doesn't, because the shareholders are just focused on the dividend. As long as they're comfortable we can do that, then they stay. And so I actually prefer it, as opposed to having a bunch of big gold funds in our stock where when bear markets hit, they have to blast out of companies because they're getting redemptions. That's almost a self-fulfilling prophecy, whereas we don't really have that with retail.
Yeah, the share price has reflected that quite well. Very stable, strong performance. You've outperformed the sector. When I guess the spinoff was 2021. It started trading a few years ago.
21. We've outperformed our peers the last 2 years, and the peers being like GDX, GDXJ. Those are the junior and the major ETFs, if you will, funds, a basket of gold equities. And I believe we do that because of this X factor of tapping into a pool of capital bigger than the gold space itself. And that pool of capital is investors that chase dividends and yield. And they may not care what you do as long as you're paying the dividend. So to get a 4-cent a month dividend per share is very attractive to a lot of shareholders.
Well, I love the monthly dividend. I always look forward to it. It's an excellent incentive to be a shareholder. I don't really see very high dividend paying, yielding gold companies, because a lot of them are getting squeezed on margins. We've seen the inflation rate really bring up costs. World Gold Council is talking on $1,350 or so. I've seen other estimates around $1,500 an ounce. So Fortitude is well below the industry averages. You have huge cushion. You have huge margins. You're able to perform well in a difficult gold environment and see the upside in a good gold environment, which really makes, I think, the company stand out. The dividend policy is excellent. But you are producing a lot of cash flow. The net income for 2022 was quite high. I think it was near $15 million. And with a share structure of about 25 million shares outstanding, it's really reflected well in the earnings per share aspect, I see.
Yeah, it has. Our costs, we came out with our year end a month ago or so, and we were at $725 all-in sustaining cost. Yeah. So that's very low for an all-in. That'd be a good cash cost number, but that's very low for an all-in number, which is why we were able to do all that we did last year. Close to over 11 million, 12 million in dividends, $12 million in exploration. We deployed $10 million, or not, a little over $9 million in capital toward Golden Mile to buy and get equipment for getting ready to build there. We remained profitable. We did all those things and added to our cash balance. So we're different than the industry.
Yes, very much so. And
a lot of ways.
And you're sitting around 45 million in cash right now. Is that?
Our last quarter was 45.1 million in cash. And we just came out with our quarter, and we were, we're going after a high end on the range of 40,000 ounces, and we're over 11,000. So we're already on track to hit the high end, if not beat it again. We've beat our outlook the last 2 years, our upper end outlook. So we don't necessarily need to do that, but we're on track to do that this year. And with that great first quarter.
And you're targeting, was it 36 to 40,000 ounces a year? That's the range. So around over 11,000 ounces last quarter. It's looking positive again for this coming year. You're sitting on almost a couple dollars a share in cash, so no debt. It's a very healthy financial position, but you are investing into the future there. So what I noticed when in February's press release about Golden Mile, and you just mentioned right now, you've been buying a lot of equipment. And part of that, I think the reasoning was because of the inflation and the supply issues. Is that the thinking for the companies to secure the equipment and not kind of buy something that not just losing value on all this cash because of the inflation rates rising and these mining equipment's getting more and more expensive. That's the thinking?
It is. We're all miners are in a tight spot right now. Especially ones that are looking to build mines like we are. You put things out to bid to try to get an estimate on what your CapEx is going to be. And, vendors will be like, okay, this price is good for 1 month. And then it got so bad, they'd say it's good for 2 weeks. Well, how do you plan building a mine, which is a long lead time situation, when you can't even hold a price for 2 weeks?
Wow.
So it was has been very difficult to nail down that estimated price. So we took the approach of, when we're hearing feedback from, we bought some rolling stock, some heavy equipment, and they're like, if you don't buy this by, X date, which is a couple of weeks, it's going to go up by 16%. I mean, these are the kind of inflationary pressures that we're under. So we decided to just pull the trigger and try to lock in all the costs that we could potentially lock in. So for instance, all the liner, that just continues to go up for the heap leach pad for Golden Mile. It just kept creeping up and up and up every time we go back to ask for a refresh bid. So we bought it all, and now it sits next to our process facility in Isabella Pearl, ready to go. Our rolling stock sits there too, ready to go. We've locked in those costs, and since then they've gone up. So we did well to lock those costs in, but we deployed, at the time, our last quarter is about $9 million, but now it's about $10 million worth of capital expense toward Golden Mile already. But in doing that, we're locking in the conveyor, grasshopper, stackers, et cetera. We're locking in the process facility, which are effectively tanks that are built modularly offsite, tested, and they'll be able to be brought in, set up very rapidly, and take the gold to the carbon phase. And then we'll truck the carbon to the ADR process for final doré production in Isabella Pearl. But we locked in all those prices, is my point. So I'm glad we did it, because costs just keep creeping up. Inflation is felt, I think, by everybody. I can't imagine a country that's not feeling it. Just, you go to the grocery store, you see it in your grocery cart. It's everywhere. So that makes it very challenging to build mines. And so we tried to get in front of that by locking in the cost. Also, the supply chain issue. It's less of an issue now that the pandemic is behind us, I'd like to think. But boy, for a time there, it was a little tenuous trying to get anything. So it makes it very challenging when we're trying to build a mine. So we just tried to get in front of that and bought as much as we possibly could. And we're pretty much done for the time being. We locked in a lot of costs, which is good.
That's a smart strategy. It makes sense, and prepared there. The company also has some other projects, some interesting exploration projects that is in the vicinity there. East Camp Douglas is one that I find very interesting. I looked at it at least a decade ago. It's got a huge potential there. So, what is the strategy with that project, and what attracted you, I guess, to pick this up?
Sure. At East Camp Douglas, it has this lithocap. First of all, it's a very large land position, district scale. And it has a lot of exciting geology, which is what you want to see when you're hoping that you have deposits. So on the south end of East Camp Douglas, we have what's called the lithocap. It's this silicified, thick, flat layer. And they're not all that common here, for sure in Nevada. There's several of them, but not as many as other countries in the world. But some of the world-class deposits are lithocap deposits, multi-million ounces that have gold associated with their lithocap. So just because you have a lithocap doesn't mean in and of itself you have anything, but we can go around the margins, eroded margins of our lithocap and get, 5 grams, 10 grams. I think our highest sample was even 30 grams of gold around this lithocap. So our lithocap is associated with high-grade gold. Mm-hmm. So the line of thinking is that whatever fed this lithocap and rose up through could potentially pool underneath it, and that's what we're chasing. So we went in with our first drill program just trying to understand structure, mm-hmm. and had we not hit any mineral in the first 2, even 3 drill programs, I wouldn't have been deterred because it's such a massive area. But in our very first drill program, we had mineralization, and we came back with our next drill program as well and hit mineralization. So what we're going to try to do is chase the mineral and hope we chase it into larger pools of mineralization, as well as find the root system that fed this. And so what I say is we're swinging for the fences. These lithocap deposits can be million ounce plus per, deposits. So we're going to swing for the fences. If we swing and hit, it'll change the face of our company. Mm-hmm. If we swing and miss, all's not lost at East Camp, because to the north, it has a bunch of high-grade veins that were drilled by past companies. And we love properties that have some work on past companies. And for those who are unaware of kind of the industry and how it works, it's like 4 to 7 companies are on a property before a deposit's ever discovered. So I never get deterred that there's been other mining companies there, because they simply perhaps look and define a mine differently. And it really makes a big difference on what you define as a mine. So we have all these high-grade veins to the north of the East Camp that we're going to, in fact, this year try to follow up on and get a drill up there so that we can understand them. But it's a very exciting property, and we're swinging for the fences there. And if we swing and miss, we'll go to the north and see what we can put together with those high-grade veins. And then there's many other targets there as well. So it's going to take a long time to explore. And in the meantime, I hope we just keep finding these open pit heap leaches like Isabella Pearl and keep us here for the long haul. I mean, that's the goal, is to be a long-term producer here.
Yeah. And you have a big property package. You have a lot of targets. I don't know if there's any other parts that I missed there with exploration. I mean, I know you have a lot of targets there, but any other active exploration work that you're focused on there?
Yeah, we have a property called Mine of Gold that has some mineralization and patented claims, and it went off the patented claims. So if you're unfamiliar with what that is, patent is more, you treat it more like private property, and then it went off into more public, so BLM. So we need to get some permits to go drill that. We also picked up a property called Ripper, and it had a lot of high-grade surface samples, and we went in with some mapping and taken a bunch more surface samples, and it absolutely warrants a drill program. So we're trying to fit that in this year as well. But I hope we spend 10 to 12 million in exploration this year, which is sizable for a company our size. We did that last year, and it really paid off because we got our hand around County Line. We understood more about Golden Mile. We had the great success early on at East Camp. So we want to just keep this rolling. We want to keep that momentum going and keep drilling as many properties as possible. Fortunately, drill rigs are more available than they were in the past. Crews sometimes are still tough to get, but That seems to be easing up a bit. So hopefully we don't have to worry about fighting to get drills,
Right.
and we can just hit it really hard with drilling, because that ultimately drives long term. And we have, I believe, of course I'm biased, but I believe the best property portfolio here. We picked it all up during the bear market when nobody else was looking, and even if we never acquire another property, I think we have enough property to be a long term player here. Having said that, we have a lot of people pitching us properties because we're one of the few producers in this area.
Oh, interesting. And you're in a good financial position. You have the share capital on your side. You have a lot on your side to work with. So that puts you in a very strong position. And not that you need a higher gold price to do well, but a higher gold price here looks like it's coming about. It seems to be attracting some new investment interest. So that might be another factor coming into play here in the near future for the industry. I imagine, there's going to be a lot more activity in Nevada, which is obviously one of the best locations to be a miner and to be positioned from risk perspective and from potential to continue to develop and explore and find new deposits there. So that's very well positioned. So it's a exciting time for Fortitude Gold. I don't know if there's any other things that you would like to add on to that, or if we.
Well, you touched on something really important, Peter, and that's jurisdiction. I gave a little background on, us operating in Mexico for 15 years. Mm-hmm. Back then, early on, Mexico was in the top quartile of mining-friendly jurisdictions on the Fraser Institute's annual mining-friendly jurisdiction reports. They've since dropped to the bottom quartile. Yeah. And it's pretty sad to watch new governments come in and really attack capitalism and really attack that, mining, if you will. And AMLO just recently proposed some dramatic possible changes to the mining law. Mm-hmm. And if that goes through, that could be devastating to Mexico. And I use Mexico only as an example to highlight how few mining jurisdictions are left that are mining friendly. Mm-hmm. And so I think that's why we're seeing a lot of these other mining companies and majors move into Nevada, because they're trying to gain exposure outside of the jurisdictions that they're predominantly in, whether Mexico or other. There's just such few mining friendly jurisdictions. Yes. And it's getting harder and harder. Whereas Nevada, gambling and mining is what drives Nevada, and they embrace it. And it's wonderful to work in a jurisdiction that appreciates that. So, I think going forward, one of the first things shareholders should look at when they look at an investment in a mining equity is, where's your jurisdiction? Where are you operating? Because you can have the best deposit in the world or the best business plan in the world, but if you have prohibitive legislation that doesn't allow you to mine or stick to your business plan, what do you have?
Right. It's very unfortunate to see what's happening in Mexico. And there's another silver mining company in Oaxaca that has had nothing but issues with the environmental permit, and it's just going back and forth. And in this new mining law, it's very unfortunate, because it's such a wonderful place to be exploring and developing, and hopefully the elections next year brings in a better, a more a proper perspective and a more mining friendly conservative government, because they are just shooting themselves in the foot. It's such a huge contributor to the economy there. To jobs, there's 400,000 plus directly employed by the mining sector down there, and boy, all those foreign companies bring in the capital. They need that, and it's not a very smart strategy. But for now,
they do, and they nationalized oil not too long ago. How soon we forget, right? And they killed that goose and had to open it back up to private interests to come in and save it. So governments rarely successful. I'm unaware if they've ever come in and successfully run mines when they nationalize. So that would be unfortunate.
It's not their specialty. Why? How should they know how to do that? It just makes no sense. But that's hopefully they'll readjust their perspective and realize what But that makes Nevada a lot better jurisdiction to be in. I'm sure the premiums are going to be rising because it is has that advantage, and it is going to, I think, now with the gold price making a move, boy, yeah, it's going to just add a lot more to all of this excitement.
Yeah, Peter, it's so fun to sell gold. Like the other day when we were 2020 and plus, and the gold price, so fun to sell gold. We sold gold that day.
Yeah.
You know, so because it really does add to our bottom line immediately. It makes a big difference. So a lot of fun, and hopefully that trend continues. And with all the, economic earthquakes that are happening and the bank closures and the inflation, there's a lot of things pointing to gold strengthening in the near and even medium term.
I think so. Our sector, we've been through very difficult times, and it's amazing to see a company like Fortitude develop and bring on a mine during these difficult markets. But as you said, it gave you an opportunity to pick up some nice properties, land positions when the competition was low. But the sector has been beat up so much that now I think it's our turn to shine. So we'll hopefully get a good period ahead of us. But it's been a pleasure to get an update on Fortitude Gold. We're really interested to see how the exploration develops and how County Line and Golden Mile, East Camp Douglas, all these other projects come about, and look forward to getting updated. For investors who are interested, how can they connect with the company? The website's fortitudegold.com.
It is fortitudegold.com, and everything that's the best launching point. And I would start there.
They're traded on the U.S. exchange FTCO.
Yeah, and we're traded on the OTC QB market, and FTCO is our symbol.
Excellent. Jason, thank you very much for your time today and the update. Look forward to catching up with you in the near future.
Thanks, Peter. Have a good day.
You too. Thanks.